Today is March 30. It's 3:50 p.m. 10 minutes and the market will be closing. We wanted to make a quick video on Square, that's SQ. Block is the company name. It crashed on March 23 from a short seller report. So here you see that, and it bounced up since then. We made a video about this, so if you haven't watched that video, we'll put the link in the description, and at the end of this video you can also click the top right corner. So the unusual options we saw today, we also suggested another trade idea, because this unusual option we saw at 215 for 1,000 contracts requires a lot of buying power. You'll see that they sold the strike price puts and then bought the 75 strike price calls. So selling these 60 puts, if you remember, this requires having 100 shares, needing to purchase 100 shares at the 60 strike price. So you actually need 6,000 buying power just to put on one of these contracts, because to buy 100 of these shares at the 60 strike price, you have to multiply by 100. So by selling those 60 strike puts, that's what it means. So by saying you're going to do 1,000 contracts, well, that means you need to have at least $6 million to put on this trade. So we did a different trade that also takes advantage of this bullish bet. If you see the analysis of this trade that these unusual options put on, you'll see here, this is the trade that requires 6,000 buying power per contract. They did 1,000 of them. It is bullish, so it gains as it goes up. So this was the trade on the options chain. And for us, we also have some hedges just in case it does continue to crash at the 40 strike prices, but that's just kind of far out there in the money in case something terrible happens, which could happen. And so what we did was, instead of buying the 75 strike price calls, we sold it because of the higher price that it's been bidded up with these large contracts. However, we also bought the April 28th, we bought the 70 strike price calls. So by doing that, we created a diagonal spread. And so our trade for this is actually this one. Let's take this off and turn that one on. And so you'll see it costs about $2.25, so $200 about, to put on this trade. You don't need 6,000. And so you can also take a bullish direction of this trade. And you'll also see that the trade is not a very, there's not much of a theta decay on this, so that's why we like it. It's a positive vega trade, near 0 gamma, and positive 21 delta. So if you compare that with the unusual option trade, you'll see here this is a negative theta trade, so that's why we don't like it as much. And the gamma is higher, which we don't like. We actually don't like that gamma risk. The delta is higher, twice as much, but you can then just buy 2 of our diagonal trades and you can get a 40 delta. So, and the vega is slightly smaller, so that's at 1. So if you want that 40, you just increase the size to 2, and you can also get a 40 delta and mimic that trade. So that's our trade. And so if you like this video, yeah, give us a like if it helped you. decide whether or not you want to trade Square. So we think it's going to continue to go back up from this drop in the short seller position, and so that's our analysis for right now. And again, we'll put that link below on our Square video we made last week when this crash happened, and then also you can click the top right corner to watch that video to see what was going on in our analysis last week. Okay, so take care everybody, and good luck trading Square.